Let's rock and roll. Good morning, y'all. Happy Monday. Hope you had a good weekend, a good Halloween. Sure, a few of you got a candy hangover. Always a beautiful thing. All right, so I'm going to tell you a bunch of things that haven't mattered over the last 2 weeks and probably don't matter until they matter. But at least just take into consideration, market's pretty extended here, and we've been pretty extended based on I think the rule book a lot of us follow. You could argue for like the last 5 or 6 days here. So that doesn't matter until it matters. I don't think the market where you're taking, 10, 12, 15% swing positions up here at these extensions, there are a few things I'm looking for pullbacks on. Then there's a few lower time frame squeezes for day trades, shorter term swings we'll take a look at. But, at the very least, don't be the guy or girl here who's just kind of wiped the floor clean with Tesla over the last couple of weeks. And you keep forcing the issue, you keep putting on big positions. And when the inevitable ultimately happens, giving back all those profits. So just don't be that guy or girl. But S&P 500 looking at the futures, brand new all-time high. So we'll see how many all-time highs we get this week. The Qs, brand new all-time high pre-market. The choppy Dow, or small caps rather, up about 0.5%, and the YM here up about just the same. So you look at things like a Tesla, an Nvidia. It's tough to suggest, take a big position here for a swing trade at these extensions. So there's two schools of thought here. You wait for the pullback to the AEMA to the 21 EMA, which in 9 out of 10 markets, it's going to be a great mindset. In this market, it's kind of leaving you in the dust here. So one alternative is you drastically scale down the position sizes because things are extended, but you're looking to milk whatever momentum is left in a stock like a Tesla, Nvidia, Google, with entries on these lower time frame squeezes. So I think once you're up here 2, 3 ATR, there isn't too much edge as far as an entry from the daily charts perspective. But if you can dial it down to a 1-hour chart, you probably had a 30-minute here. That's exactly what I'm talking about, actually. That's perfect. So that daily chart's super extended. But if you want to milk that momentum, and the momentum is still here, stacked DMAs, green 10x bars, you look for a 1 hour, a 30-minute, a 15-minute squeeze. Smaller positions, but you're catching that momentum. And for those of you in the options room, I think Henry's been noting a lot of these 15-minute squeezes here in Tesla. So crazy extended. 15-minute squeeze. Good structure above the 21, stacked DMAs, green 10x bars. For me, at least, it's the same criteria I would take to a daily chart, just on a lower time frame. So good for those quicker moves. And you can see into Friday's close, there's a 15-minute squeeze, and we're going to open up at brand new all-time high here. So if you are looking to milk whatever momentum's left up here at plus 200 ATR, look for a squeeze. Look for a good old squeeze. So one of my favorites here, along the same lines as a Tesla and Nvidia, a bit extended, but probably got more gas in the tank here, is Google. I think you got a pretty sexy target up there at 3,000. So for Google here, picture perfect example. 30-minute squeeze fits all the criteria of a bullish structure, and it kind of gives you that next push. So few folks in the options room, we did jump into put credit spreads there on Friday. So those are, I think, those are a few things that could work in this market. So in terms of actionable ideas based on that mindset, one of my favorites here is Goldman. And a big reason as to why it's one of my favorites, aside from its own structure, is the trend in the financials. So usually in any other market, I'm really looking for that dip to the 21, which could happen any day now. But in this market, a little bit more blindly driven by momentum. Something consolidating at the AEMA, it's pretty much as good as it's going to get. So great trend to the financials. And then we look at one of the big boys. Over here in Goldman, just underneath your all-time high at 420 and change, chopping at the 8 EMA, but there's a pretty solid 4-hour squeeze, and it's got a bullish structure to it. Above the 21, positive histogram, got your green 10x bars. There's also a 2-hour squeeze, and a 1-hour and a 30-minute. So Goldman on a lower time frame right now, and really even on a daily chart, last 4 or 5 sessions here, it's in consolidation mode. It's in build-up energy mode. If the uptrend for the market continues, one would think the trend for the financials continues. You should see that 30-minute, that 1-hour, that 2-hour, the 4-hour squeeze for Goldman firing long, taking you towards a brand new all-time high. But I mention it in that order because it starts here with the market. Tesla, a Goldman, a Google, all good-looking setups. Market comes into the 8. Market comes into the 21. It's a good assumption just about everything is coming back on down with it. But if the if extended turns into even more extended, and the financials make an immediate push off of the 8 EMA, if those things come together, and they have to come together, but if they do come together, here's Goldman at your launching pad, right underneath a pretty big target, with 4 or 5 squeezes on a lower time frame. So I think you got a good structure there. Next one here is Target. I think worth noting all the bullish momentum here. You have green 10x bars on the monthly, the weekly, the 3-day, and the daily, and I think under the surface. So big push here off the 21. A good 3 or 4 days of chopping, again at that AEMA. That's kind of the common theme in this market. Any consolidation, if you can find some, it's a little bit closer to the 8. But let's peep this here. So there's a launching pad. No 4-hour squeeze, but it's bullish. So monthly, weekly, 3-day, daily, 4-hour red 10x bars, or green rather. There's the squeeze though. That's what we're looking for. Great looking 2-hour. Green 10x bars again. There's also a 1-hour squeeze. There's probably a 30 and a 30-minute. So again, kind of an order here. If the market pulls back to the 21 EMA this week, Target's probably going to take a dump. If the market continues to push, here's your launching pad. There's, again, 4 or 5 squeezes on top of the launching pad. You're looking for that domino effect at this point, where the first thing you're looking for is for the 30-minute squeeze to fire. Now, take the rule of thumb of the squeeze. A good squeeze, once it fires, can give you, call it, 6 to 8 bars of momentum. So the 30-minute squeeze fires, there's potentially 5, 6, 7, 8 bars of momentum on your 30-minute chart. Now, if that's enough momentum to trigger your 1-hour squeeze to fire long, again, you're looking at 5, 6, 7, 8 plus bars of momentum on an hourly time frame. Now, if that can trigger the 2-hour squeeze, here's the domino effect. Your 30-minute fires long, it's got a pretty decent gas tank. But if in the process that can trigger the 1-hour, a little bit more fuel to the fire. If in the process that triggers the 2-hour, a little bit more fuel to the fire. And then with the context that you're taking this, this is all taking place here, your daily AEMA. Could be good for a push into the highs here. So those are 3 setups I got for you as far as lower time frame. You got Google at the AEMA, or I'm sorry, you got Goldman. The AEMA, I think a good trend in the financials and a bunch of squeezes. S&P 500 comes in, down comes Goldman. The grind continues. Here's a good spot, I think, to look for the next push. So keep an eye on that bad boy. Same thing here with Target. Such a solid trend. So I think putting aside a pullback in the market, I think personally poised for a move back into the previous high. So the 4-hour, 2-hour, 60-minute, 30-minute squeeze offers a little bit of edge for the pursuit of that move. And then Google, I think, towards 3K. Google comes in if the QQQ comes in, but if the pumpage here continues, I think Google's looking pretty solid. And maybe even without the QQQ, Google's looking pretty solid. But those are a few things for the lower time frame squeezes. Um, I think a tough market to be working swings here. One spot I would look to work a swing anyways is Lucid. So like everything else and its mama right now, it's extended. But I am looking to buy the first pullback here. And the comparison is going to be Netflix and Tesla, which we'll pull up those first. But here's the context, big weekly squeeze, finally breaking out. I think you look to buy that next dip. So as a visual example, check out Netflix. It's basically asleep at the wheel here for almost a year. Actually, a little bit more than a year. Goes into a weekly squeeze August of last year, weekly squeeze fires September of this year. So this is tough to trade as far as the short-term swings because everything looks basically picture perfect on a daily chart, but it's a very short-lived move as you get towards the top of the weekly range. Once you can break that weekly range, the way I look at it is potentially here's a stock that's like free to run now. It's kind of been pinned down, could be a bit of a rogue elephant at this point, if that makes sense. But what you're looking for is that initial break of weekly resistance. You're looking for the weekly squeeze to fire. Then you're looking for the first pullback. You're looking for the first flush. The key here, this is really important, on that first flush, you don't want to see the stock fall back into that range. Look at Amazon. Very much like Netflix. Big, long, weekly squeeze, big, long, weekly squeeze. You got your initial break. Your first pullback takes you right back into the range. And Amazon's been a little bit, not a little bit, it's been a lot of bit choppy here ever since. The difference with a Netflix, right? Your first pullback, previous resistance turns into support. And in probably the most beautiful fashion possible, you break your weekly squeeze, first pullback, daily squeeze, off to the races. And you had another daily squeeze. You had the double dip there. Oh, no, that's a 4-hour chart. There you go. Tesla, very much the same. Really similar to a Lucid. From the perspective of it's just a chop fest here for quite a while. You break out, you don't fall back into the range, off to the moon in this instance. So Lucid here, I'm looking for the same thing. First decent flush here. As long as we don't fall back in that range, looking to buy that dip, looking for this thing to be free to run at this point. Now, where do I look for the dip? I mean, in this market, a dip to +2, not that bad. A dip to the AEMA, kind of on the cusp of that weekly chop fest. That'd be a pretty solid entry. But you might not get your pullback. We're going to open up at around 40-ish bucks this morning. So no dip here just yet. That's pretty much all the main thing I got as far as a swing goes. I mean, what advice can I offer up here on NVIDIA? Other than, wait for a pullback if you're going to take a big position. And if you want to play around with this thing here, wait for your next 30-minute squeeze. But just do this with, maybe half, maybe a quarter of your typical position size. Again, just don't be the trader here who's killing NVIDIA and you keep buying those out the money calls and you're getting paid beautifully. And then when the inevitable happens, you're caught with your pants down, so to say, and you're giving back all those profits. Just don't do that. And the best way to avoid doing that is just proper position sizing. So for conversation's sake, you've been crushing NVIDIA here. Say you've profited $1,000 on this push. Take your next trade on NVIDIA with like 200 bucks of exposure. Guarantee yourself you're going to walk away here with 800 bucks of profit minimum, all said and done. I know it's probably tough to imagine right now the market actually coming in a bit, and it will eventually. And I think when it does, it tends to happen pretty quick. So It's not to say it happens today. It's not to say it happens this week or this month. But I think you make those position size adjustments up here at the moon. Up here at the moon. But that's about all I got for y'all. We're extended. It doesn't matter until it matters. Volatility index. Take a quick peek over here. Chilling down here at support. You got some buy signals. You got signs of momentum shifting slowly but surely towards bullish. Everything's kind of set up here for a big old, boof. Big old pop there. Doesn't matter till it matters, though. Tesla opens up this morning, 11:30. Nvidia's going to open up. Let's see. Kind of flat, 256. Let's see. Google, 2966. So not too crazy. But a quick recap here. Trying to milk momentum, you look for lower time frame squeezes. I think at key levels on your daily chart, ideally. So Goldman and Target, I think, are good examples of that. But just scale that in position size. And then for some bigger picture swing opportunities, I do like Lucid. I don't like it enough to take a big position up here at whatever this might be, 4, 5, 6, 7 ATR. But that's what I got, y'all. And in terms of just to keep things interesting here, I do think Facebook is shortable. I think it's shortable until you get 2 closes back above your 21 EMA. The difference here, compared to the S&P or the QQQ, your weekly chart is in downtrend territory. In my book, a weekly chart, it's based on a weekly chart, but just in terms of the stock in general, a stock enters weekly downtrend territory once you start to close under the weekly 21, negative histogram, red 10x bars, no positively stacked EMAs. Potential shift of structure, potential shift of momentum, potential shift of where that path of least resistance is going to be. So I think you short bounces here until you get 2 closes back above the 21. Just as comparison here, since March, April of last year, not the once, has the S&P or the QQQ even come remotely close to entering downtrend territory on the weekly chart. Not a single weekly close under the 21 EMA. That's the difficulty trying to short this thing. You're in an uptrend. Your daily chart might look sketchy. Your weekly chart is in an uptrend. Food for thought there, as far as why is shorting this thing so damn difficult? 'Tis an uptrend, but I got about 5 or so minutes here, y'all, before I got to jump into the options room. So let me get caught up in the chat, see if we got any chart requests. Good morning, Mark. Thoughts on Etsy? I won't have any suggestions here until after earnings. In terms of the structure and everything we're looking at visually, I like that a lot. I'm a simple man, right? Positive histogram, stacked EMAs, green 10x bars. I'm a little bit partial to like it here. We'll be together again Wednesday, which is perfect because earnings is Wednesday. Mark, let's revisit that one together then, because I think you got some good momentum here. Earnings is, it's always that potential coin flip. Robert, so Airbnb's been setting up really nice here. The only thing that's kind of kept me out of this is earnings, which is, what's this going to be, Thursday? So another one I would want to revisit after earnings because it's a good structure. Really well behaved in a pretty wild market. Weekly squeeze histograms trying to fire long. That's a big question. Great looking squeeze. Does earnings spoil the squeeze, so to say? Which could happen in the form of a gap up after earnings at 185 or a gap down towards 160. Selfishly, if we open up anywhere in this neighborhood, Now I'm really interested. So I think the structure definitely warrants some attention. What to do with it a few days out from earnings, that's where I get a little bit limited. Jan, affirm. Just kind of a super steady here, super steady. You get a little bit of time before earnings. So earnings will be next week on Affirm. A bunch of bullish momentum, and you're just kind of riding that AEMA for the last, call it week or 2 weeks here. It's extended, as is everything. I like the 4-hour squeeze. And a good strong uptrend like that, that's a break in the action you're looking for. Offers you an entry into the trend, albeit a little bit extended, but it offers you an entry with a little bit of edge, where you can kind of work that timing component. So good looking 4-hour here. I would think this just continues to grind into earnings, really. There's no sell signals, there's no exhaustion just yet. So I would think very much like an NVIDIA or a Tesla. You wait for that 4-hour, 2-hour, 1-hour, 30-minute squeeze. Position size appropriately, because at this point, a dip to the 21, it could sting a little bit. But I think the trend continues here into the announcement. But that's just an opinion. To add, a little bit of edge for ourselves, here's a 30-minute squeeze. So you watch that develop, see if that offers a next push. Look at the momentum, though. Green lights means go. Green lights means go. Good morning, Angela. So, Angela, Amazon's going to be interesting because what tends to be the case is after earnings, the Bezoses, or Jeff and former Miss Bezos, they sell a crap load of shares, which, when the two biggest, I think, shareholders in the company start to dump, you can see the impact on the price there. Now, does that happen like clockwork? That I'm not too sure of. That just tends to be the theme. After earnings, they're allowed to sell some shares. Jeffrey's going to buy some rocket ships, things of that nature. So it'll be interesting to see if that's going to be, the theme here once again. Putting that aside, it's a really tough one for me to gauge here because it's just stuck in that weekly range. Now, you're going to have these moments in time in this weekly range where your daily chart looks really bullish, but we tend to just get towards the top of the weekly range and then kind of come right back in. So Amazon's one I'm just not too sure what to do on right now. Though part of me is interested to see if the trend continues here. If I'm looking to get long in this market, put it this way, I think there's cleaner setups out there right now. And then for Cisco, so there is a positive histogram, no stacked DMAs, and it's a little bit more neutral here. So compare this just for comparison's sake to Target. A lot more momentum there. So that doesn't mean Target's the better trade, but that's kind of the name of the game in this market, is find some momentum and latch on wherever you can. So if I was going to look for a trade that was going to last, call it 2 to 5 days till expiration, I'd choose Target. If I was looking to slowly build a position, giving it a good month or so to continue to chop back and forth, that would be Cisco. The momentum profile here looks a little bit more like a stock that might spend another week, 2, 3, 4 weeks building up the momentum it needs to start to push like it did back here. Where the Target more so looks like I'm ready to go right now. So both good setups, just I think differences in terms of the trade we're looking for, really. All right, guys, a few more here. XP EV. Earnings coming up. This looks very similar to Target, though, from the perspective of big push off the bottom, chopping above the AEMA. Not the same quality of trend as a Target for sure, but the same principles apply. Here's your launching pad. And what this rocket typically needs to take liftoff here is going to be a squeeze. Looks like we're going to gap up, though. There's a good example of what we're talking about this morning. A little bit extended, but there's your edge. Just find a squeeze somewhere, build a position. If the trend continues, you're in pretty good shape to catch the continuation. Looks like you're going to gap up near 49. So it looks like the continuation is continuing. Good morning, Dan. Costco. It just came up in my scans this weekend. Big push off the 21, bunch of bullish momentum. There's your AEMA serving as the launching pad. We're squeeze hunting now. There's your 2 hour. There's your 1 hour. So are you extended? Yes. If the move is going to continue from here, those squeezes serve you well as far as gauging an entry. A lot of momentum here in this market. Heck, in this market, that's not extended at all. That's not extended at all here. Malek, McDonald's, Mickey Dukes. Earnings done? Yeah, earnings is done. So it's not going to be something that typically, will blow your socks off. Where you're waking up and it's up 10, 12%. And there's nothing wrong with that. This is just kind of a good old stable trend here. I think the weekly squeeze continues. So I'd build a swing position, kind of treat it like a, set it and forget it kind of mindset. I think the trend continues here into November, into December. Great looking weekly chart. No crazy momentum, but kind of fits the theme here with McDonald's. It's nice and steady, and nice and steady can be really solid. I think especially if you're looking to sell put credit spreads, then you love nice and steady. PGA. You don't want to see me swing a golf club, I'll tell you that much. Good looking squeeze here. Good looking squeeze? I don't know. Maybe heading into Christmas here, everyone's gonna be buying them some Abercrombie and Fitch. Just take note, just respect the fact that you're range bound here in your weekly chart. Very, very likely you get more of the same until it's finally ready to go. So you can sit back and do nothing until it breaks out, then wait to buy the first dip, or again, set it and forget it. Come in here, plant the seed, come and check on it again in December, January. It's a good mentality, I think, with these weekly squeezes. Big push, top of the weekly range. Big dump, bottom of the weekly range. You're basically just playing ping pong here. But I do like your weekly structure. I really do. All right, guys, I got to cut it loose here, though. I got to jump into the options room right now, pretty much. But there's a few things to take into consideration. The biggest thing I want to preach here is position sizing. Position sizing is everything. Very, very easy. If you're buying calls every day for the last 2 weeks, very easy to make a lot of money. Very easy over the last 2 to 3 weeks to make some serious growth in your account if you're playing this momentum with calls. Scale down in position size. A lot of folks kill it on the way up, and on the 2-day trip back down to the 21, a lot of folks give it all back. So if you're killing it here, make sure you pay yourself. That's my biggest piece of advice. There's a few swing trade opportunities. There's a few good-looking lower time frame opportunities. I think position sizing is everything right now. But I appreciate y'all tuning in this morning. Always a good time. We'll be back at it together on Wednesday, and then Chandler has got you on Friday. But I wish you all the best of luck here today. So for those of you in the options room, I'll catch you in there in a few minutes. We'll basically cover everything we just covered again and see what the market has in store today. But I appreciate all of you. Have a great day.